commodity prices are going to go up for decades. So earlier this week, one of the executives at BlackRock, and I'm not a huge fan of BlackRock because of how corrupt they are. They're in bed with the Chinese government. They're in bed with the US government and the European Union governments for a lot of this ESG corruption. They're a big part of the Davos crowd, manipulating capital, moving it across borders, doing a lot of shady stuff. However, this executive for BlackRock did an interview with Bloomberg a few days ago talking about how commodity prices, there's an enormous amount of underinvestment by oil and gas companies, by mining companies, by agricultural companies, and I think a lot of that is true. However, he is saying that this is because the entire economy, the entire globe is shifting to a green economy with ESG. They are decarbonizing. I do not think that that is true for why commodity prices are rising. I think a lot of this has to do, and I have the chart there on the left-hand side of your screen. That chart is a little old. It's about 20 months old. It came out from Tavi Costa, who is a hedge fund manager. I've interviewed him if you're familiar with him. He works for Crescott Capital. That shows the amount of underinvestment or CapEx, capital expenditure, in oil and natural gas, also other parts of energy, but it's mostly oil and natural gas. A lot of this has to do with national oil companies and how corrupt and politicized the energy markets are. But anytime a commodity price rises, governments always try to tax it more. Look at what's happening with all the latest tax laws. In Chile, which is the Saudi Arabia of copper, they put a new sliding scale royalty on copper miners. That will prevent investment. That will prevent mining companies, especially foreign mining companies, from making even more capital investment. This is why the production, the silver production for the formerly two largest silver mining countries in the entire world, Peru and Mexico, is rapidly declining. It is because of tax policies in those two countries towards silver miners, towards mining companies. The silver mining production in Peru used to be the most in the world. It's been rapidly declining for over 5 years now. I believe Steve St. Angelo over at SRS Rocco Report was one of the first to cover this, so I'll give him credit for that. The amount of investment and mining production in both Peru and Mexico declining, but tax policy and governments going after, whether that's taking control or taxing or stealing, as in the case with Pemex in Mexico, the oil profits in Venezuela. There's tons of examples of waste, fraud, corruption, and abuse with national oil companies. And this is why a lot of these oil companies, these national oil companies, are not making proper reinvestments into property, plant, and equipment, maintaining property, plant, and equipment, which is what CapEx is. So that's maintenance CapEx, or maintenance capital expenditure. And then there's growth CapEx, investing in growth. So investing in replacing reserves, which are very, very expensive, exploration and production, either growing production or finding new reserves. These national oil companies all over the globe, which control the majority of the world's oil resources. So there's a false narrative in the mainstream financial media. There's a false narrative pretty much everywhere that Chevron, ExxonMobil, a lot of these larger private oil companies control the majority of the world's oil and natural gas reserves. Actually, that's not true. The majority of the world's oil and natural gas reserves are controlled by governments and national oil companies. So your Venezuela's, their national oil company. You have Saudi Arabia and Aramco, which did a partial IPO, although who knows what they're counting. And there's been rumblings for years now, starting with Matthew Simmons, but there's been rumblings for many, many years that they've overstated reserves. So all these major governments that are either in OPEC or non-OPEC producers in OPEC Plus, they control the majority of the world's oil and gas reserves. And a lot of those oil profits and natural gas profits are not being properly invested or reinvested to maintain property, plant, and equipment, to replace oil reserves or natural gas reserves, and to grow production. And that's why we have commodity problems, because of bad allocation of capital decisions by central planners, by bureaucrats that are running these state-owned enterprises or national oil companies. These national oil companies are essentially state-owned enterprises where they might have some portion of stock traded on the exchange. Petrobras actually is very cheap right now on a valuation standpoint, but given the scandals and the details of the scandals that have come out with waste, fraud, corruption, and abuse, theft, all the crazy details, multiple presidents in Brazil involving Petrobras. The risk reward for it is still dicey. Maybe as a trade, Petrobras is intriguing, but as a long-term investment where you just buy and hold, given the amount of corruption in Brazil and all the crazy stuff that's happened with Petrobras, I would not be a long-term buy and hold investor with Petrobras. But on a valuation basis, it is super cheap compared to the other oil companies. And this is the case, unfortunately, for a lot of different commodities across the board. So it's these governments that decide whether or not the mining companies or the oil and natural gas companies will actually make investments. Because these governments, if a commodity price goes up too much too quickly, they'll start putting taxes on these commodity producers and foreign capital and foreign investment, and they will kill the sector. It happens all the time in emerging markets. It's even happening now in a lot of developed countries. You have greedy governments, whether that was with the Fosterville gold mine, which is arguably the world's best gold mine in terms of margins and grade. There was a royalty tax put on Fosterville like 3 or 4 years ago, much higher royalty tax, tens of millions extra per year for that local Australian government. This is unfortunately what governments do. And this is a major reason why the producers of these commodities do not make investments. Also, a lot of these commodity producers have difficulty raising capital. So every time there is a bear market and commodity prices fall, capital just totally disappears. It evaporates. It becomes very, very scarce. So the cost of capital becomes extremely punitive. We're seeing this right now. It's starting again, unfortunately, for gold and silver miners. This is why so many silver miners are transitioning to gold mining, why there will be very, very few silver miners in the near future that will have 50% or more of their revenues in silver. The revenue mix is skewed now towards gold, copper, base metals, and silver is a declining portion of the revenue mix, even for primary silver miners. So unfortunately, I do not see this trend getting any better anytime soon because of how the overwhelming majority of capital allocators have decided to invest. And many of them don't even want to do investments in mining companies, in oil and natural gas. And that actually has created a nice little niche now for these larger precious metal royalty and streaming companies, is because the banks, is because a lot of these other companies and capital allocators do not want to make long-term equity investments into mining companies. So the precious metal royalty and streaming companies, really since 2008 and 2009, have heavily benefited from the lack of capital allocation into mining companies and oil and gas. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis than I provide in these short little free videos, there are now over 190, I think there's almost 200 articles and audio podcasts behind my paywall exclusive for patrons, all for only $5 a month. I think it is one of the best deals out there. Just in the last month or so, there are 7 new audio podcasts and a new article. So that's 8 new pieces of content out in the last 4 or 5 weeks. And also in the last 26 weeks, there are 39 new articles and audio podcasts out. I think it is one of the best deals out there. The research is on a lot of interesting topics. There's 2 audio podcasts out in the last week or 2 about the uranium sector. Also, there was an article I put out this week about a very interesting gold royalty junior. The valuation on this junior is not attractive yet, so we're monitoring it for now, but I think it will be a takeover target for sure, 100%, considering where the asset is located in the next 2 or 3 years. I'd actually be shocked if there's not at least 1 or 2 hostile takeover attempts on this asset. It is that high quality. So if I could wrap up this short little video very quickly, commodities normally have boom and bust cycles. Unfortunately, with paper futures contracts and so many options traders nowadays, and banks here in the US, the large banks, which basically make hedge fund trades for their profits instead of loans, you have all this extra volatility. You have an exacerbated boom and bust cycle because of all this extra paper, especially with gold, silver, oil, which have enormous amounts of futures contracts on them. So you have all this extra volatility created in the sector. This has kept away a lot of private investment from making larger long-term investments into the actual resource companies. Unfortunately, all this extra volatility People do not want to make the necessary investment into mining companies, into oil and gas companies, into agricultural companies. And this is going to create an enormous problem if China is going to continue to stockpile food and energy. They've been stockpiling food and energy now for the last at least 12 to 18 months. It's probably even been longer than that. But if China does take a break from buying base metals or buying energy or buying other types of commodities, these commodity prices could temporarily crash, and that will prevent equity capital from private mining companies and private oil and gas companies from being raised. The other problem with this, and this is a major part of why the major capital allocation to the energy sector is not happening, is because so much of the world's oil and natural gas reserves are not owned by private companies. They are owned by national oil companies. And there are so many scandals of waste, fraud, corruption, and abuse with national oil companies, politicians and bureaucrats and family members and military people that are cronies and friends with the people in power. Whether that's stories I've heard over the years, and there's been newspaper articles about this the last 15 or 20 years, a lot of them. Nigerians with briefcases full of cash fleeing the country and going to Switzerland or the Caribbean or somewhere in the Bahamas for offshore bank accounts, or Venezuelan politicians and military personnel that were driving for an entire tanker truck full of oil. They paid a tiny fraction of the market price, drove it across the border to Colombia or Brazil, and then sold it for millions of dollars so they could go buy real estate in Miami or a private jet, or put the capital into a secret offshore bank account. There's tons and tons of these stories about waste, fraud, corruption, and abuse of national oil company profits and resources and reserves. And those are profits that could have been reinvested back into the business. This has been compounded for decades for national oil companies. This is one of the major reasons why you have a former OPEC producer like Indonesia, which used to be an enormous exporter of oil. They consumed more of their own production. It was heavily subsidized in Indonesia. And then Indonesia was kicked out of OPEC. Why? Because they couldn't export enough oil to meet the quotas. They were consuming too much of their own production. Also because they probably, their national oil company, did not reinvest the oil profits back into maintaining property, plant, and equipment, maintaining oil refineries, replacing oil reserves and natural gas reserves, and growing oil production. And unfortunately, this is happening across the board with pretty much every single national oil company. So that is a major reason why. And oil and energy are a big key for input costs, whether that's fertilizers, transportation fuel, plastics, growing food, so many other things. It starts with energy, but there is bad policy from governments, whether that's overtaxing mining companies after commodity prices rise, or a lack of investment by these state-owned enterprise national oil companies into actually running their oil and natural gas businesses and energy companies soundly. And unfortunately, this will continue. So if there are crashes in commodity prices, they will probably be painful, but they will be fairly short term as long as demand for the commodity over the long term continues to increase.